Have you ever wondered how a token can jump from a 291% gain to a staggering 609% increase in a matter of just a few hours? If you have been tracking the SOS coin, you know that the chart has turned parabolic. Are you watching this move from the sidelines, or are you looking for the right entry point before the next leg up? Or perhaps are you worried that this is a classic pump and dump that's about to correct? If you want to understand the price action behind this massive breakout, don't move an inch. For the next 12 minutes, we're going to peel back the layers of this chart, analyze the volume flows, and decode the psychology of the whales currently moving this market. Welcome back to the channel. Today, we are deep diving into the latest price action of SOS, OpenDAO. Let's look at the cold, hard data from the last 24 hours. The shift is undeniable. We moved from a market cap of around $640K to over $1 million in a heartbeat. The 24-hour volume has surged and the percentage gain has exploded from roughly 291% to over 609%. When we look at this on the chart, the bullish engulfing patterns we are seeing are indicative of heavy, aggressive accumulation. However, when you see a 600% move, the risk of a mean reversion, where the price snaps back to test previous support, is at its absolute highest. Let's talk indicators and technical precision. The volume-weighted average price, or VWAP, is currently trailing far behind the current spot price, which tells us that the move is extended. When the price is this far from the VWAP, it usually suggests an overextended move, and we need to be extremely careful. Furthermore, the RSI is currently flashing deep into the overbought territory. While that doesn't mean the price can't go higher, in a true bull run, RSI can stay overbought for a long time. It does mean that the probability of a sharp, violent pullback increases with every passing minute. Now, let's dig into the MACD on the hourly time frame. The gap between the signal line and the MACD line is widening, which confirms the strength of the current impulsive move. However, look closely at the unique traders count. It is increasing, but is it increasing fast enough to support this price level? We need to see sustained rising volume to prevent a total collapse of the current support at the 0.000000055 level. If we lose that, we could see a quick, painful retest of the 0.00003 region. Beyond the raw numbers, we have to look at the security fundamentals. The CoinMarketCap scan shows the token as safe, with no honeypot or rug pull indicators. That is a massive plus for community confidence. But even with a verified status, the liquidity, which is sitting around $39K, is relatively thin compared to the massive volume. This is a critical point. Thin liquidity means that a few large sell orders could cause a slippage event, potentially wiping out a massive percentage of your position if you're using market orders. This is why, in this specific environment, using limit orders is not just recommended, it is mandatory. Let's talk about the psychology of this move. Why do tokens like SOS move this way? It's driven by retail FOMO and whale liquidity. When retail traders see a 600% gain, they panic buy because they don't want to miss out. Whales, on the other hand, look for this exact liquidity to exit their positions. This is the oldest game in the book. If you're entering now, you are playing against someone who is likely sitting on a 500% gain. You are the liquidity for their exit. This is why you must have a plan that doesn't rely on hope. How do you trade this safely? If you are already holding, this is the time to consider trailing your stop loss. Lock in your profits. Move your stop loss up as the price moves up. Don't let a 600% gain turn into a loss because of greed. If you are not in the trade yet, do not chase this candle. Wait for the retest. Wait for the volume to stabilize and for the RSI to cool off. The market will always give you another chance. But it won't give you back your principal if you lose it in a reckless emotional entry. We also have to consider the macro environment. We are in March 2026, and the regulatory landscape for DeFi is shifting. Projects that have clear utility or deep community roots like OpenDAO tend to have more stickiness than pure meme coins. However, never let a fundamental narrative blind you to what the chart is actually doing. The chart is the final verdict on what the market believes. If the chart says sell, no amount of community hype will keep that price up. Every time you look at these screens, ask yourself, is this a structural move or is this just hype? The difference between a trader who makes money and a trader who loses money is the ability to walk away when the risk-reward ratio is no longer in their favor. This current move is high risk. Treat it with the respect that high-risk assets deserve. Disclaimer: this video is provided for educational and entertainment purposes only and does not constitute financial advice. Crypto assets, especially those with high volatility and low market caps, carry extreme risk. You could lose your entire investment. Please perform your own due diligence or consult with a professional financial advisor and never invest money you cannot afford to lose. If this technical analysis helped you see the market a bit more clearly, please hit that like button. It helps the algorithm share this information with others who might be looking for a breakdown. Don't forget to subscribe and turn on those notifications so that when the next move happens, you are the first to know. Drop a comment below. Are you holding or are you taking profits? I'll be reading the comments. Stay disciplined, keep your risk management tight, and I will see you in the next analysis.